itself. And here we go. This is the chart of gold, and that is spot gold. And what you see is an ideal fourth wave that is still ongoing. It's very possible it might not end up being like that. If it's very strong, it might end up being like that. That we have seen the bottom of the sea. We're going to pop up here without exceeding this level, and then we're going to come down a bit, essentially spend more time around here, and then the fourth wave is done, we're going up. If it is done, which is not out of question, it's not out of question that it's over, you will see this. I mean, that will be the right interpretation. That's the 4-hour scale, okay? I would say this is somehow squeezed in. Yeah, it's sort of rushed in, this last bit. But it could happen. It could happen. When you see a lot of other markets falling, people rush to gold for safety. The rush to gold, the rush to silver for safety. So maybe, yeah, maybe the fourth wave is actually done and it's going to go up. The signal, as far as I'm concerned, would be this, running above this level, which comes at cash 425.5, let's say 423. If it zooms high above this level, then it's probably ready. It's probably ready. It's going to run up. It's going to give us a new high above this level. And where silver is where gold is going, of course, silver is going to go, and then you have the rest of the metals, and slowly everything is going to recover. Yeah. Now, if you see it continuing for, let's say, another week, which is perfectly possible, trading sideways and suddenly dropping, the key level to watch on the downside here is this. We do not want to see gold breaking 3896, essentially this low. We don't want to see it breaking it, and certainly we don't want to see it breaking it and sort of stagnating around here. That will not mean it's the end of the bull market in gold, but it will mean that we are going for an extended correction that could see it going quite a lot lower. Okay, so these are two levels for you to watch if you are watching it very short term. Okay, these two levels that I marked, and in between, be tolerant if you can afford it. Yeah, depending on your level of margin, what you're trading, futures or just ETFs or cash, whatever you're trading. Give it time to consolidate. This is currently the best reading that I can suggest. Consolidation here would lead to another run higher. And that is the absolute key level for you to watch on the downside here. Now, let's have a look at silver. Silver did something that gold didn't do, and that's the 4-hour scale. And I don't know if you can read what I mean here on the chart, but if not, I'll explain to you immediately. Do you see where silver went? Right here, it actually went under this level. We got 5 legs, 1, 2, 3, 4, 5. Now, by doing that, silver is telling us that, first of all, there could be a slight extension here. I doubt very much that silver is going to break 46. In fact, this pattern shouldn't see silver going to 46, 45.5. That'll be a stretch. Not that it can't happen. And even if it happens, you know already that I'm very, very bullish on silver. So I won't be worried. It's just that it is going to tell us we're going to go for an extension of this correction. That's all. But I doubt that it's going to go that low. But right now it did break this level, and gold didn't. Gold didn't. Gold actually shied away from breaking this level. So gold at this point is showing relative strength comparing to this one. Now, we could see the A, B, C continuing down here. That will possibly finish the A, B, C that I'm showing you on the higher scale here. And then we'll go sideways again. All of this fitting possibly a 4th wave. Now, you would say, how about the idea that I expressed in the case of spot gold, that we have possibly the correction done, finished, squeezed in? Well, it's not impossible here. How about this? And then you have your fourth wave done. It's not impossible. It's not impossible, but for this to be confirmed by Mr. Market, it has to rise above this level. It has to rise above the previous double top area that I'm showing you here. Then you know that the fourth wave is behind you. Now, in the case of silver, it's a little bit trickier than in the case of gold because there is an alternative point where the fourth wave may have ended, and it's right here, because as I show you in the red labelings here as an A, B, C, D, E, do you see? The fourth wave may have ended here, in which case you have 5 legs up, you have possibly an A, B, C done, it's going to go up in the third wave. The reason why I don't like this interpretation is because what would be in that case a second wave, yeah, if you take this as a first wave and that second wave, the second wave is rather longish. Yeah, it's rather longish. Technically, it's okay because it didn't break the bottom right here, the initial, yeah, the beginning of this first wave, it didn't break it. So technically it's possible, but it just doesn't sit right, in my opinion, in terms of proportion of time. It took longer than you would expect a second wave to take. But this will clarify as we get further price action to go by. But right now, what I would say is similar to what I suggested in the case of gold. You have an extremely important level right on top, and you have a very, very important level right here. My reading of this is that we are probably closer to the bottom than to the top, meaning that it's beginning to look interesting. That doesn't mean that silver can't fall, but I'm a believer in silver that it'll find support here. And again, if it doesn't, we're going for an extended correction, but silver can come faster, can come back faster than it falls. So beware if you fall asleep on shorts.